Bitcoin was born out of a financial crisis. In 2009, an anonymous figure named Satoshi Nakamoto introduced the world to a peer-to-peer digital currency. The goal was to challenge centralized banking systems. Bitcoin's foundation lies in cryptography. The blockchain secures every transaction ever made. Each block links to the previous, forming an unbreakable chain. This decentralized ledger is transparent, secure, and immutable. At first, Bitcoin was dismissed as a nerd's experiment. Early adopters mined thousands of coins on personal laptops. Then came the infamous 10,000 BTC pizza purchase. A man paid 10,000 Bitcoins for 2 Papa John's pizzas. That same amount of BTC is worth hundreds of millions today. By 2013, Bitcoin hit 1,000 for the first time. It caught Wall Street's eye. The IRS called it property, not currency. Then came Mt. Gox. A massive exchange hack shook confidence. Billions vanished in digital smoke. Yet Bitcoin survived. It thrived, rising from the ashes. In 2017, Bitcoin hit $20,000. Media frenzy ensued. Crypto became mainstream. But with hype came scams. Bitcoin crashed to $3,000. Skeptics declared it dead again. It wasn't. In 2020, stimulus checks hit American bank accounts. People bought Bitcoin instead of spending. Bitcoin began a new rally. Institutional money followed. Michael Saylor entered the scene. He's the executive chairman of Strategy, and he bet the house. Strategy began buying Bitcoin in bulk. It started with 250 million, then another 175 million, then another 650 million. He argued the dollar was losing value. He said Bitcoin was the strongest monetary network on Earth. He declared more companies will have to adopt. Tesla bought 1.5 billion in BTC. Elon Musk tweeted his support. Square invested. PayPal enabled crypto purchases. Bitcoin hit 64,000 in 2021. A new generation of investors was born. Bitcoin was now digital property, a store of value in an inflationary world. Then came the correction. China banned Bitcoin mining. The U.S. infrastructure bill created tax uncertainty. Bitcoin dropped below $30,000, but miners moved to Texas. Hash rates recovered. Bitcoin bounced back. In 2024, the halving approached. Each halving cuts the Bitcoin block reward in half. It reduces the new supply. Every halving has historically preceded a rally. The 2024 halving was no different. Bitcoin crossed $100,000. News outlets declared a new era. ETFs were approved. Wall Street poured in. BlackRock launched a Bitcoin fund. Fidelity followed. Bitcoin became part of retirement portfolios. Nations began to adopt Bitcoin. El Salvador was first. Other Latin American countries considered joining. Bitcoin's fixed supply, 21 million coins, was its anchor. No central bank could print more. This scarcity drove demand. Michael Saylor made headlines again. He said Bitcoin could hit $1 million. Then he doubled down. He predicted Bitcoin would reach 13 million per coin by 2045. His reasoning? Hyper-Bitcoinization. He believed the world would abandon fiat. Bitcoin would be the global reserve asset. Digital, incorruptible, and borderless. The more people use Bitcoin, the more valuable it becomes. It's a network effect. The rally continued. Celebrities endorsed it. Athletes took salaries in BTC. Cities announced Bitcoin payroll options. JP Morgan opened crypto trading desks. Goldman Sachs followed. Old money was finally in. Meanwhile, Bitcoin mining became cleaner. Renewables powered over 60% of operations. Bitcoin became greener than traditional banking. Climate activists reconsidered. Mainstream media changed its tone. Universities added blockchain degrees. Young people embraced it. Older generations hedged with it. Bitcoin became a bipartisan issue. Both parties saw value in blockchain. Tax clarity improved. The IRS issued friendlier guidance. Capital gains thresholds were updated. Bitcoin donations funded political campaigns. Pro-crypto candidates won races. Real estate transactions went on-chain. Art galleries accepted BTC. Bitcoin became the standard for digital wealth. NFTs boomed then faded. But Bitcoin endured. Its purpose was clear. Sound money in a digital age. One coin to store value across borders. One protocol immune to manipulation. Bitcoin wallets topped 300 million users. Smartphone apps made it easy. Families used it for remittances. NGOs used it to bypass capital controls. Protesters used it in authoritarian regimes. Freedom tech became more than a slogan. It was a reality. Michael Saylor kept buying. Strategy, formerly MicroStrategy, had over 226,500 BTC. His conviction never wavered. Every dip was a buying opportunity. He said there's nothing safer. No CEO ever held so much conviction. He compared Bitcoin to Manhattan. Limited, valuable digital real estate. Others caught on. Corporations followed. Pensions began allocating. Endowments dipped in. Banks offered Bitcoin loans. Homes were collateralized with BTC. Bitcoin futures and options matured. The market gained depth. Volatility stabilized. Confidence grew. Insurance firms joined in. Bitcoin became a core allocation. It wasn't fringe anymore. It was legacy-proof. Unhackable and permanent. People held their own keys. Security increased. Whale movements were public. Scams decreased. Education increased. Bitcoin literacy became a life skill. Kids learned it before algebra. 1 BTC equals 100 million Satoshis. Tipping creators in real time. Bitcoin made it lightning fast. Fees dropped to fractions of a penny. Merchants accepted it with ease. Point-of-sale apps spread globally. Hyper-Bitcoinization crept closer. Developing nations leapfrogged banks. Bitcoin gave them financial identity. Saylor's vision looked prophetic. $13 million no longer seemed insane. It became a hedge against fiat collapse. It united generations. Bitcoin wasn't just money. It was a movement, a mathematical revolution, a protocol of peace, decentralized hope, engineered freedom. It empowered the individual. It dethroned the gatekeepers. Bitcoin reshaped the world's financial DNA. And the rally? Still going. Still strong. Still historic. This is Bitcoin. And we're just getting started.